Hello everyone. Today we shall talk about GBPUSD in detail and what happened with it last week and how you could have captured most of the expansion that it gave uh, downwards. So let's start. Let's begin by analyzing the chart on 1 month time frame. Here I want you to notice that initially it was in a consolidation. It expanded upwards, then made a retracement, and then again expanded upwards. Going back into, if you could see here, this was the last buying candle, and we can merge these two and we can see that these two are the amongst the last buying candles, after which big downside rally happened. So this is where we draw a horizontal line. This is known as an order flow. As you can see, this previous month price has tapped it and uh, gave an impulse move downside. So we are expecting again on as per the monthly time frame for price to go a little down. Next, let's go to weekly time frame. On weekly time frame, you can clearly see the impulse move that occurred from the order flow. Um, this is the impulse move that occurred. Sorry. Yes. And right now the price is in a state of retracement, retracing upwards. So now this one level is also an important notation to note, that this is where the price arrived and then it went back to retrace. Next we'll go to 1 day time frame. And on 1 day time frame I want you to notice a few things. You can see at this point we can say market created a market structure shift, and these were the sell side liquidities and they are not taken. Then again market retraced back down and expanded upward. That expansion, it again made a shift, but it left some sell side liquidities here. Again, this side, market again made a shift, took out the buy side liquidities. All these, let's paint it in green so that you'll understand these are the buy side liquidities which got taken, whilst leaving the sell side liquidities protected. The red columns, the red boxes are the sell side liquidities which were protected. Now, if you can remember, I told you to take this swing low as an important mark. That was because this is the part where the sell side liquidity was protected. And as you can see, it came down, and as soon as it tapped it, it went back up. That's why this served as an important region. Besides that, one more important observation to note is that this very recent protected sell side liquidity was taken by the market. Now, this would have been a market structure shift for the downside, but this is also a liquidity sweep. That's why we did not consider it as a market structure shift. But later, when price went back up and then came down again, this is where you can say it with a confirmation that this is a market structure shift, and now price wants to protect the buy side liquidities. This is the protected buy side liquidity. You can also see there are three swings: 1, 2, and 3, which makes this high an intermediate term high. So what does this mean is that this high will be protected for a long time, for quite a while. This next high becomes a short term high. This is an intermediate term high, and this next, anything other than intermediate term high would be short term high. That's what this is also an important level. So now if you see, after taking this liquidity, the protected sell side liquidity, price goes up. Technically, for a successful downtrend, it should have been that this high should have been protected, but it did not happen. But what also did not occur was price breaking through this high and going ahead, going beyond it. That also did not occur. Price only, what it did was it only did a liquidity sweep. So price does that when it does not have satisfactory point of interests on its way. As you can see, this entire leg was filled with liquidity voids, and the only thing significant was this order block, and which you can see price has respected. None of the price bodies, none of these bodies went beyond the order block region. Only the wicks went to take the high. Alright. So now that this is clear that it had swept an important liquidity from the past, now we can say for sure that it wants to go down, because we have already established that on a monthly we have seen a probability of a downtrend. On weekly and daily also we are seeing signs of it. On daily we are seeing buy side liquidities being protected, and previously protected sell side liquidities being taken, intermediate term high being formed. So all this is cumulatively telling us about a downside rally for the coming week. Now let's see what happened on first. Let me mark the days of the week. Just a minute. Okay, so let's start off with Monday. Monday, usually I prefer to not do anything, because this provides us with a good insight on what the entire week would want to do in advance. So Monday is like the footprint. Monday is a tool. Monday facilitates the initiation of footprints in the market. So if we only stay back and observe Monday, what happened in Monday, you will see an FVG being formed here, and at the same time, let us draw the FVG. This is 4-hour FVG, so we'll make it yellow. Okay, I have to draw it from here because this is where this candle starts. It's actually an overlap. So this FVG is pierced by this candle's low. If I remove this, you'll see this candle's low. So that means this is an overlap, which is why we will extend this outward, saying that it's an overlap. Okay, and we'll go to 1 hour time frame. Now these are the levels that we got by waiting and observing what Monday does. Next up, we come to our Tuesday and we turn on the sessions. If you wait for your levels, you'll understand, you'll notice how wonderfully your levels work, and you don't have to sweat a lot to forcefully find a trade. As you can see, Asia went down, sweep the low, previous low, and then started coming back up. The London session, the first session of Tuesday, uh, gave us an upward move. In this upward move, it tried to fill in the FVG that was left open on Monday. Next, in the lunch break, so the time between London and New York is known as lunch break, and generally nothing much happens in this time, and we are not supposed to place trades because markets are not that active. But again, there could be exceptions, just like this one where the price has moved significantly. But then again, this is not a right time according to the studies that I've done for us to place an order, and you will very soon see why. If we okay now if we go if we go to London's New York session, we wait for the New York session opening. You will see we we have gotten an impulse move from this overlap that we had already marked. So what comes after impulse move? So generally the sequence is like this. First you get an impulse move, then you get a retracement, and then you get an expansion. And this expansion is what we are targeting. We are not targeting the impulse move. Impulse move is there to guide us that okay, the price wants to go in this direction, and once it retraces, it gives us a chance. It's a golden opportunity. It's a perfect timing, divine intervention, we can say, to help us place a trade at that exact moment so that we can capture the entire expansion. Now, this is exactly what happened in this, as you can see, and then price retraces. This is also called the Judah swing, protraction for New York session. And in that protraction, if you draw out, let's take the bodies of this candle, this green candle. If you take its mean threshold, so this is a Fibonacci setting where it just divides it into half. Uh, so if you take this its mean threshold, or if you don't have the setting, you can just go to this box and you can extend the box. And in the boxes setting, you will find styles and this middle line. You have to tick this middle line so that you get the same thing. It divides the box into two equal halves. So why this green candle? Because before this downward move, before all these red candles, the primary candle which was there, the last candle which led to all this move was this green candle. That's why it becomes a bearish order block. Now you will see price has protracted till its midpoint, and this is where we could have had a trade. You enter a trade here, place the stop loss here, and then you leave the trade running open. Because why? Because I prefer it this way, because it was Tuesday, and if I'm taking a trade in the earlier days of the week, then if I'm confident that price is going to stay consistent with its trend for that week, then I will continue the same trade till it reaches a major POI as a target point. So okay, this is the trade that we can leave going ongoing. This was the first trade that we had. Let's remove all this and we'll go to next day. So now on next day, as you can see, the entire Tuesday went down. Now after the Tuesday, what do you have to do? Nothing, just check your daily time frames, check your 4-hour time frames, and check for any POIs, points of interest, from where you can sell again, because you have already established that the trend, the long-term trend, or because we have found it, we have deduced it on the monthly chart that price is supposed to go down now. So for quite a while, we can say price will tend to go down, and that's why we'll continue selling it, and we'll try finding new ways of continuing the sell. Now if you see on the 4-hour time frame for the day of Tuesday, there's nothing much happening here. There is no FVG. This FVG is filled by this these overlap and then this green candle. So nothing much on the 4-hour time frame. So that's why we'll go to 1-hour time frame. And here you have to work this out intuitively, that okay, this last green candle, it won't work because it was already pierced a little with this red candle's high. The next green candle would be this one, which can serve as an order block, and we will keep this in mind. After that, you will see this green candle being broken downwards, all these red candles, and nothing much happening in the Asian session. But in London session of Wednesday, you will see it retracing up till a certain point. And now if you zoom in and try to see, okay, where exactly is this London session trying to go, that's when you'll realize that it's going till this Tuesday's green candle's body here. It's going till this part. So we can clearly say that it has been treating this green candle as an order block. So in order for us to again confirm this, we can go to a smaller time frame and look for an impulse move, then a retracement, and then again an expansion. So while the price was expanding on this candle, I took the trade here because I was targeting for a little long term. So I thought there wouldn't be an issue taking a trade here. So this is how I entered this trade. while it was on, it went down. The entire day did nothing much sideways. Now, next day, we also it was Thursday. Generally, we have news during during Thursdays. On Thursday, you will see that initially it takes out the sell side liquidity of the entire consolidation. Then it goes back up to a certain level. Let's see what level is that. As you can see here, price has gone exactly to this green candles mean threshold, not exactly but near it. So we can say that it is again treating this as an order block because it is a green candle, and um, it is a this is where most of the institutions have bought, and then which has most of the institutions have sold, as a result of which this selling has occurred. So we can successfully say that it went up till this midpoint, and then it started giving us an impulse move downward. Now again, if you don't want this is now